So anyway, how's everybody doing? I hope everybody's having a great week so far. I really appreciate everybody for joining me on this new episode, this new show. Right now, I want to go over Jerome Powell and the Fed rate cut that everybody's been anticipating. Um, I have been arguing against a rate cut because I believe rates are already too low, right? The rates are way too accommodating already. Well, anyway, nobody listened to me. And once again, the Fed did the opposite of what I would have been doing over the past 5 years. Well, longer than that, but basically since COVID, they've done everything wrong. And that's why you're paying such high prices. Same thing with the federal government. They've done everything that they've done. I would have probably done the opposite. And so I want to get into that. And so now Jerome Powell, he's cut the interest rate by a quarter point. And he was asked during a press conference, hey, do you think that the rate cut is going to really have a big effect for jobs or prices or anything like that? And he looked at the reporter and says, no. So then my question is, if you don't think it's going to have that big of an impact, then why do it, right? And so to me, that was very puzzling. And then another thing that was asked of Jerome Powell was talking about the job reports and how these job reports have just been absolutely abhorrent. And to be fair, started under Biden and just continued straight through now 7-8 months into the Trump administration, where every single job report is being revised down. Well, now they did one, the last numbers that came out from the BLS were over 900,000 jobs have been overcounted. And Jerome Powell, every time he came out and has done interviews or spoke to the public, and he would give these meetings, he'd say how strong the job market is, and that's why we're holding rates where they are, and how robust we are, and all of this nonsense. And it turns out that when you do the math, it equals about 76,000 jobs they've overcounted every single month. So, that's 76,000 people that were not hired, that when people were gambling on the stock market, gambling on all sorts of investments, including the Fed, they have gambled wrong, every single person. And that's why when people like me are saying, hey, wait a minute, the economy's weak, you need to look at this stuff. You need to protect you, yourself, and your family. You need to do it now, right? Because we're headed for the iceberg. Nobody was listening, right? Like, I should have by now on YouTube 100,000 subscribers easily, right? But I don't. Why? Because messages like mine are not popular, right? People don't want to hear that, right? What people want to hear is everything is great and don't worry, we can have all the money that we want printed. They could just send you checks in the mail and everything's going to be great, right? My message is, sorry, we're broke. We can't send you those checks no more, right? Matter of fact, if you get a check, we have to take a haircut off of it, right? Because we can't afford to make these payouts anymore, right? We're broke, right? We're busted, right? We are $37 trillion in debt and climbing. And, the bankers bust, right? And so what's happening is that because rates are too low, people are still bidding up prices. Now, what I predicted back with COVID, right, with the lockdowns and everything going on, and back then Congress was just raining money down on people, and under the Trump administration, there was $7 trillion created out of thin air and passed out. And then Biden comes along, and they create another $7 trillion and dump it down onto the economy, right? And right now, Trump's first term, his first bill, the big beautiful bill, is $5 trillion. He's raised the ceiling to $5 trillion. And I guarantee you they will hit that ceiling long before that due date is due, right? And so the American people cannot keep up with it, right? And so I want to get into first I want to kind of explain what's going on and why this is happening. So I wanted to go back in time a little bit and talk about Trump's first term and actually go back into Obama's year. So those 15 years, roughly 15, 16 years between Obama and Trump, if you look at the inflation rate, right? The inflation averaged anywhere from like 1% to 1.5%. Well, what happened during that time? Well, during that time, right, we had the '08 crisis, right? We had the first QE program was put out, right? We had QE1, QE2, right? Later on, QE3, right? And QE is basically bundling up a bunch of brand new cash, bailing out banks, bailing out institutions, raining money down into the economy, right? Instead of allowing things to fail, right? They just kept propping up a lot of zombie companies. So then you ask yourself, you say, well, Bobby, why was, if they were creating all this inflation back then, why didn't we feel it? Well, I can tell you why, and it's a pretty interesting reason when you understand the economics behind it. Because what happened was back then, and even prior to that, the U.S. economy was very strong, right? We used to have trade surpluses, right? We used to have a very strong economy, right? And what's happened is, over the years and decades, that economy has eroded away, right? Remember the sucking sound that Ross Perot talked about? Well, that sucking sound is much louder now. It's much bigger now, right? And so what's happened is that entrepreneurs like myself, employees, people who are out there working and actually producing goods and services, back then were able to hide the inflation, because what would happen is we would outpace the rate of inflation. So let's say the Federal Reserve, let's say, created $100 billion worth of inflation, let's just say. Well, we would, let's say, create $98 billion worth of productivity, or 99 billion, right? So it's only that 1 billion, right? Just to make it in terms that people can understand. So what happened is that $1 billion, maybe 1%, right? You see the 1% that's there? 99, 100, right? And so what happened was the Fed was able to print up all this money because we were so productive, right? Well, what happened with COVID, when they shut everything down, they kind of blew all that up. And so what's happened is the Fed, everybody remembers, Jerome Powell said, oh, inflation's transitory, like they invented a whole new term, and the inflation's going to go away. And if people were listening to me back then, I was saying, not only is it not going away anytime soon, I said they're going to blame the businessman, they're going to blame the private sector for the inflation, right? And what's going to happen is, I predicted that we would have the decade of either high inflation or over-accelerated inflation, meaning they will not hit their target. And so far, in 5.5 years, a little bit past 5.5 years, my prediction has been dead on. If anybody's been listening to me or watching me, I've been absolutely dead on. And you'd be very hard pressed to find anybody out there who has predicted that. And the reason why I understood this is because I understood that the politicians in DC and the Fed were going to continue to do the wrong thing, right? Because nobody wants everything to blow up under their watch. So what they're doing is they prop up the economy, right? And how they prop it up is by printing up a bunch of money and doling it out to people, right? And so what that does is it allows people to bid up the stock market, to bid up housing, right? To bid up wages, right? So yeah, you're going to get more paper at the end of the week, right? But you're going to get to keep less paper percentage-wise when you go out shopping, because you are not the only person who got more paper. Everyone else did as well. And so what happens is you're actually getting a lower standard of living, right, when that happens. So now fast forward to today, where Powell is asked, hey, would have you done anything different if you had the correct job numbers, right? Because we got these job numbers, and it came out that they overcounted by 900,000 plus jobs, right? Which equals 76,000 jobs every single time the labor market came out and says, hey, the labor statistics, we have such a strong economy. Well, we don't. And I've been saying that those numbers are fake now for years. Just like the inflation numbers are fake as well, right? When they say inflation is 3%, you better believe that inflation is 6%, right? Because they don't count it the way that they used to back in the 70s and early 80s, right? They changed the formulas, okay? And when they say your unemployment rate is 4%, it's really 8 or 9%, right? Because now they don't count people gave up looking for jobs. They don't count people who are underemployed, right? So let's say you got a master's degree in XYZ and, you should be, let's say, making $200,000 a year with your degree, but now you're flipping burgers because those jobs are gone. Well, they count you as a full-time employee, but they don't count you as underemployed, which they used to. Or let's say if you're working 3 part-time jobs, they count every single part-time job as a full-time job now. That's how corrupt these numbers are, right? So I've been telling people, hey, don't believe the phony numbers. The numbers are fake, right? And no, it's not what Trump is. So Trump, it's funny because there is a kernel of truth to when Trump says, hey, these numbers are bogus, right? And we got to fire this woman. But that's not the reason. The reason isn't because they doctored the numbers like Trump said regarding the BLS numbers, Business Labor Statistics, Bureau of Labor Statistics. What they did was their formula is wrong, right? Now, my problem is I don't think the government should be coming up with these numbers, right? It's sort of like having the mafia give you the statistics on crime. you know what I'm saying? Same thing with the Federal Reserve, right? If the people who are creating the inflation are giving you the inflation numbers, how stupid is that, right? You're literally letting the burglar tell you what was stolen. They're not going to tell you what was stolen, right? They're total idiots, right? They're not that, I'm sorry, they're not that stupid. Who are stupid are the people, because the people fall for this stuff. Well, they're not falling for it anymore. People who watch shows like mine, or my show, not even shows like mine, you're not going to find one like me, right? It's very rare you're going to find somebody who believes in free markets, Austrian economics, right? Limited government, right? I want government so small you could barely see it. And so I understood that the Federal Reserve was going to do the wrong thing. And I also predicted that the Federal Reserve would retreat from fighting inflation before they ever hit the 2% target. And that's what they just did this week. By lowering the rates, they basically forfeited fighting inflation. And so we can expect prices now to be accelerated higher as now more people can bid up prices due to lower interest rates. But what that's going to do is it's going to price a lot of other people out of the market. So if you're a lower wage worker, you're a middle class person, wage worker, maybe you have a small business, right? You're not going to be able to expand, right? You're not going to be able to save that money anymore that maybe you used to save, or maybe you're going to have to trade down, right, when you go shopping, because as prices go up, your real wage goes down, right? And so it is so important for people to really take my advice. You know, if you can't afford, and now gold, wow, how did gold react to all this? Gold is now tapping 3,700. You know, the last time I talked about gold on this show, gold was at 3,400, right? Now, gold, I look at gold. Gold is the real barometer of inflation. And when gold goes up, that means your purchasing power is going down because gold is real money. And so now I have a lot of friends who message me and say, Bobby, what good is that? I can't afford $3,700 an ounce, right? But what you have to understand is I've been telling people to buy gold way back when it was under $300 an ounce, when you could have afforded it. Now that boat has sailed off. So what I advise people to do is to buy precious metal mining stocks, right? So instead of paying $3,700 for an ounce of gold, right, you can buy the GDX or the GDXJ for around $65 or $80 a share, right? And there you're buying the gold that's in the ground, plus you're buying productive companies, right? And let me tell you, the stocks that I have mentioned have beaten the S&P and the stock market by 65% to 110%, right? I have one stock in my portfolio that has beaten the Dow by over 220%, okay? So, and mind you, this is not a guess. I'm not bragging or boasting, but I've been doing this for a very, very long time, and now I'm trying to share this information with people and to get them on the lifeboats. I see the iceberg, and I'm trying to get people to jump on the lifeboat, right? Rather than take the ship into the iceberg and sink, right? Why? You don't want to be the person lying on the raft, right? Lying on a bed frame, right? Out in the middle of the ocean, right? With no clothes on, right? And so I've been giving my perspectives for many, many years, and now I have this show to do it. And so what I need people to do is to like, share, subscribe. Get your friends to subscribe. Look, I gotta go. My goal is to go live on YouTube, right? And so we gotta get this. We have to get this voice out there, right? Not just my voice. If you know anybody like me, you're not gonna find. I doubt you're gonna find somebody like me. But if you do, right, you got to support those people who believe in individual liberty, sound economic policies, right? Listening to other people, right? Not just fighting with people. One thing that I started to do was I started getting rid of people on some of my social medias because they just want to argue, right? They just want to argue for the sake of arguing. And if people are going to be fair-based, I'm just getting rid of them, right? And I don't need the aggravation. I'm kind of too busy running my businesses and like doing this show. And I'd rather work with people than work against people, right? And so that's what I want to do. And so help me by doing that by subscribing to the channel, right? So now that I got that out of the way, let's, talk about housing. And so a lot of people are like, I can't buy the house because the rate's too high. And what I've been telling people is, no, it's not. The rate is actually not high enough, right? Because the idea of raising the rates was to bring down the housing cost. But that's not happened. Now, what has happened is prices since COVID have gone up, and now they've gone kind of sideways. But the problem is everything else around the house has gone up. Your insurance, your property taxes, maintenance. I mean, if you had a plumber come to the house, forget about it. I mean, the guy wants a liver and a lung, right? And again, I was in trades. I understand this stuff. I'm not beating up on trades. It's just a fact that if you need somebody to do some work on your house, you're going to get bent over, right? He's going to get you, right? And that's, again, he's not doing anything wrong. That's what it costs now. Right? Because we've bid up prices thanks to the Fed. And so now what's happened is your house has gone sideways, but the cost has gone up. Look at rents. Rents have gone way up, right? And so, yeah, this quarter point, all it's going to do is it's not going to bring down prices really, but what it's going to do is keep bidding prices. It's going to allow people who shouldn't have a home, they shouldn't be buying these houses. It's going to give a few more people a chance to buy a house, but the cost of that is a higher house, right? So what I believe is going to happen is I believe we're going to have stagflation. And we see it now. And stagflation is basically prices go up as jobs go down. And right now we see the jobs are down. Matter of fact, we have a jobs report that showed that more people are looking for jobs than are being created. Right? That is the cornerstone of a stagflation scenario. Now, mind you, I might have been early to that party predicting that, but okay, so now we're here. I've been preparing. I'm prepared for stagflation. I want you to be prepared as well and to take your savings, instead of it sitting there in dollars, put it into something real. I mean, ask yourself, if banks are forgoing 4.25%, 5% interest, the whole gold, right? What does that tell you, right? It tells you that they believe that the federal government is going to do the wrong thing, that the Fed is going to do the wrong thing, and they're going to destroy the money faster than the rate of interest, right? That's what they're telling you. So watch the people who have been doing it, the people who know what they're doing, which are the bankers. They don't want to lose money, right? The bankers don't want to lose money. And so you know, and then you have a lot of people. Now, another thing that's happening I want to talk about with housing, the reason why prices have also stayed elevated, because a lot of people trapped in their houses, right? I know people who have a 2-handle interest or a very low 3, right? But I know 2 handles out there. So if you have a 2% mortgage or a 3% mortgage and interest rates, let's say, are at 7%, you are not going to give up that house. You're just not going to give it up. So what happens is there's less supply out there. And because there's less supply out there, people bid up prices. And what's happened is we have a lot of new builders. What they'll do is, to hide the price reductions, they'll say, hey, we'll give you free countertops. Hey, we'll upgrade your countertops. Hey, we'll upgrade your carpet. They're even paying some of the interest on your mortgage up to 5 years, some new houses. But what they do is when they sell it, it's showing as the full listing price or close to it, right? But when they're doing those extra upgrades and stuff, that is an actual deduction in the price of the house that they're getting, right? Their profit, right? If I'm selling you, let's say I'm selling you a car, and I'm like, hey, the price is $5,000, but then I'm like, hey, I'm going to upgrade the brakes and I'm going to do some steering and some other stuff, and that's going to cost me $1,500. I'm no longer getting $5,000. I'm now getting $3,500, right? Same thing with housing, right? When they give you free upgrades because they can't sell the house, that's what they're doing. They're taking the deduction in the price, and that's not showing up in Zillow and other real estate data. Also, another thing is that what's holding up the real estate market right now is upper and wealthy homes, right? Very expensive homes. And those are a lot of cash buyers. So what's happening is you have people who are trapped in their houses that would leave, but they can't because the rate's too low. The rates for them to move are too high, right? Because they're not going to give up a 2 or a 3 for a 7. And then you have builders who are giving all of these discounts that aren't showing up on the radar. And then you have the wealthy buying cash. So all of these things are happening. Plus you have a lot of equity firms and hedge funds buying up real estate, the real estate that is out there. So you have a multitude of issues. And all of that is also created by the government by packaging this stuff up, backing these loans, right? So again, you know, when they're let's say I have a mortgage and I get a mortgage deduction, right? Why do I get a mortgage deduction? Well, that is to encourage people to buy a house. But if you don't own a home, let's say if you're renting, you are subsidizing my mortgage. When I do a mortgage deduction, you are basically subsidizing my mortgage. Why? You're a renter. Why should you subsidize my mortgage? Again, all of this stuff bids up prices. And a lot of people don't know this stuff. They have no clue, right? And so that's my job, is to get out there and teach people about this stuff. So when people are out there celebrating, oh, we got a quarter point, big deal. Even Powell said during his press conference, they says, hey, is this going to have a real difference in the job market, inflation, da-da-da? He says, no. I mean, you know, so again, I go back to why do it, right? And again, maybe he got tired of getting beat up by Trump. And then you have that FOMC, the one of the people that were on the board got investigated, and maybe all the people, and they're like, I don't want to get investigated. I'm going to just vote now to lower it. I don't want any smoke from the administration, right? So this is what you're dealing with. So get ready for, again, higher prices, less jobs, less opportunities, right? That's what's coming down the pike. Now, if you know where to park your money, if you have money to park, a lot of people don't, you got to be smart. You got to think with your head and not with your emotions, right? And you got to go with the winning hand. And the winning hand is to get away from dollars. That's the winning hand. And so I wanted to go over that, and I wanted to just give my perspective on what Powell just did. I think it's a big mistake, and that's going to show up in the numbers. We see the dollar index fell to one of the lowest points in years because of this. That was the reaction of it. I said that was going to happen, and we have to understand something, that when the dollar goes down, again, that's against other currencies. And so what that means is, let's say we're trading with China, or let's just say we're trading with Germany, right? Let's just say, or France, or Swiss, right? The Swedes. Let's say we're trading with the Swiss franc. Well, the Swiss franc has been kicking our ass, right? As far as purchasing power goes. So when you hear economists say, well, the inflation's worldwide, not really, because their currencies are much higher than ours. Now, before it was the other way. Before our dollar was higher. Now they've beaten us. So what that means is, when we trade with them, what happens is we have to use more dollars. They're going to demand, hey, if you want to buy whatever we're producing around the world, you're going to need more dollars, because your dollars are now no longer worth what they were on the world market. What does that do? That bids up prices, right? And I also, last thing I want to go over is tariffs. Powell was asked about tariffs. Is this quarter point going to affect what's going on with tariffs? And are you still concerned about tariffs raising prices? And he said, look, what I was concerned with was that, this is what Powell said. Powell said, what I'm concerned with is that we're going to get a big jump, right? And then it's just going to stay elevated and just keep going, kind of like a spiraling effect. Well, what's happened is that we have importers and their companies. See, what we have to understand is there are companies that import. There are American companies. And what we found is that the people who are eating the brunt of the importing are the import companies, right? So American companies are eating it, plus companies like mine. Like, I have a company that deals with aluminum, right? And I can only get this aluminum overseas. Well, my aluminum has a 50% tariff plus a 20% tariff that was before that. So 70% more I pay for my aluminum, which you cannot, there is no American substitute, right? So what happens is the importer might eat 15%, maybe 20%. And then we end up getting it. And then I might be able to eat another 5 or 10%, right? So there you have about, let's say 40%. Let's say 40% of the tariff the importer ate and I ate. 40%, right? The other 30% I passed on to the customer. He's got to eat it, right? So that's what's happened. That's what's happening all over the place. So when you're seeing the inflation rate 3%, 4% each time, that's what's going on. Right now, if you took the inflation rate and extrapolated it over the year, we're right now above 5% inflation for the year. That's where we are. And remember what I said earlier, that if they give you a 5% inflation rate, that means really inflation's 10%, which is about right. That's about, depending on what company what kind of business you have, right? Some things are going to have higher inflation, like my stuff that's been tariffed to death. That's why mine's higher, right? where other things might be a lot lower, right? But at the end of the day, we are paying that extra amount. And Powell, basically like kind of just, basically what Powell was doing was he was setting it up to blame inflation on Trump and on everybody else, greedy businessmen and all of this, which he's done before. And yes, the tariffs are Trump's fault, and the result of those tariffs are Trump's fault. But you have to separate the cost of the tariffs from inflation. Tariffs are not inflation. They're two separate things, right? You can have prices go up. Like, I can raise my prices. It has nothing to do with inflation, right? It could be I want to make an extra. Maybe I feel like, hey, my customers can afford another 2 or 3%. Let me add it, right? There are some businesses like that. And then you have other businesses that are like, hey, man, if I don't raise this 2 or 3%, I can go out of business. That's my margin. So you have to understand that there are different mechanisms why prices go up or down. And so not every time a price goes up, it's because of inflation. Sometimes that's the cost of doing business, right? And so, or you can have the Federal Reserve print up a bunch of money, like we were saying earlier, that like during the Trump administration, the first term and then Obama's terms, where producers were able to produce so much that you could hide the inflation, right? Well, those days are over. So anyway, I wanted to go over that stuff. I really appreciate everybody taking the time to check out this show. Please like, share, comment, subscribe. If you're subscribed, get a friend to subscribe. Just look, if you have a friend and you're like, hey, check out this guy, he's really good on economics and stuff like that. Again, I'm not here to beat up on the Democrats or the Republicans. I'm here to give you my perspective, give you a libertarian perspective, give you a free market perspective, an Austrian economic perspective, sound money perspective. And if you know people who are interested in that sort of thing, please get them to subscribe. It doesn't cost anything. Also, hit the like button. That doesn't cost anything. The more likes I get, the more YouTube will see that and put it out there. Thank you for being gracious enough to spend your time with me. I really hope that you enjoyed this episode. I have more stuff that's coming up. New episodes are coming up, and I really enjoyed this, and I hope everybody has a great rest of the day and a good weekend that's coming up. Take care. God bless. Stay safe. And I'll see you on the next one.